Folks, it's clear that China is making moves that could shake up the global scene, and not in a way that favors the good old USA. In recent years, we've seen China dramatically pivot its oil imports. They're not just moving away from American oil, they're cozying up to the global south, especially the BRICS nations: Brazil, Russia, India, China, and South Africa. So why would they do that? It's all about diversifying and securing their energy supplies while building bridges with emerging economies. China is playing the long game, aiming for a broader and more stable energy strategy. Now, let's talk about those trade spats and political fireworks with the US. Sticking with American oil has become risky business for them. Remember the big US-China trade war? Those tariffs really stirred the pot. China saw the writing on the wall and figured that depending on US oil was like sitting on a ticking time bomb. They don't want to be caught off guard, so they're spreading their bets across different suppliers to dodge any bullets from future sanctions or trade barriers we might throw their way. It's smart. They're making sure they're not too tied to any one country's oil tap. And here's the kicker. They're doing a lot of their trading in currencies other than the US dollar. That's a big deal. It chips away at our clout on the global stage and the dominance of the dollar, which could hit our economy where it hurts. Let's take a closer look at who's fueling China these days. In 2023, their top oil partners were Russia, Saudi Arabia, Malaysia, Iraq, and the UAE. These countries are key players in China's oil game, offering competitive deals and strategic partnerships that China is eagerly embracing. When we talk about the big players in the oil market, Russia is topping the charts in China. In 2023, they were the kingpins, supplying 18.33% of China's total crude oil needs. That's a whopping $94 billion worth of oil, folks. Around 2.1 million barrels every single day for the first half of the year. This isn't just business as usual, it's a strategic partnership cranked up to the max. With all the global tensions and sanctions hitting Russia, China is stepping up as a key ally, buying up Russian oil that others are avoiding. Now, I've got a quick favor to ask. If you're finding this discussion enlightening, smash that like button. Your likes and comments not only mean the world to us, but they also help more people get informed. And if you haven't already, consider watching the whole video to support our channel. We really value your engagement, and it helps us keep bringing you these deep dives into what's happening around the world. Thank you for being part of our community. Now, not far behind, we've got Saudi Arabia holding strong as the second biggest supplier. They provided 10.7% of China's oil imports, valued at about $55 billion. That's about 1.8 million barrels per day. But here's the catch. Their slice of the pie has shrunk a bit thanks to Russia's aggressive push. Yet, the Saudis aren't just sitting back. They're gearing up to pump more oil into China in 2024, with some lucrative contracts likely to boost those numbers. They're playing to win, aiming to keep up with Russia in this high-stakes market race. And let's not overlook Malaysia. They contributed 8.8% of China's imports, a cool $45.5 billion. Their strategic spot in Asia and attractive pricing make them a key player. It looks like they're set to maintain that momentum into 2024, banking on solid trade relations and smart infrastructure moves that facilitate trading. Rounding out our list, Iraq came through with 6.9% of the imports, totaling $35.4 billion. With their hefty oil reserves and lower costs, Iraq is a bargain China can't pass up. With more investments and deals on the table, their oil flow to China isn't drying up anytime soon. What we're seeing here is a massive shift. China is playing chess with global oil, making moves that could reshape the whole market. For us here in the US, it's a wake-up call. We need to be savvy, strategic, and ready to respond, because the oil game is changing, and it's changing fast. The UAE is stepping up its game in the oil trade, folks. In 2023, they provided a solid 6.6% of China's crude oil imports, amounting to about $34 billion. Every day, they were pumping around 480,000 barrels into China, marking a whopping 40% jump from the previous year. The UAE isn't just selling oil, they're making smart moves by investing in energy infrastructure right in China, cementing their role as a key player in the market. Looking ahead to 2024, The UAE is poised to keep the oil flowing strong. They've got a tight trade relationship with China and are lining up new long-term deals to bolster their oil exports. This isn't just about selling oil. It's about strategic partnerships that stabilize and boost their standing in a fiercely competitive market. Now, let's not forget the big guns, Russia and Saudi Arabia. They're not just in the game, they're dominating it. Russia is still sitting pretty at the top, expected to deliver another whopping 2.1 million barrels per day to China in the first half of 2024 alone. This isn't just trade. It's a powerhouse partnership that's thriving despite global tensions and political noise. Saudi Arabia isn't taking a backseat either. They're gearing up to ramp up their exports big time in 2024 with new contracts brewing. Their sights are set on supplying new mega refineries in China, like Zhejiang Petroleum and Chemical, planning to deliver 480,000 barrels per day of their finest Arab crude by the end of the year. Watch Saudi Arabia push hard to grab a bigger slice of the Chinese market, giving Russia a run for its money. Let's circle back to our other key players, Malaysia and Iraq. Malaysia continues to hold strong, leveraging its prime location and competitive pricing to supply about 8.8% of China's imports. Iraq isn't fading into the background either, with their cost-effective oil production and strategic deals. They're expected to maintain robust supply levels into 2024. What we're seeing here is a dynamic, shifting landscape in global oil trade. These countries aren't just supplying oil, they're building deep strategic connections that are reshaping power dynamics on the world stage. For us here in the US, it's a clear signal. We need to stay alert, adapt, and rethink how we handle our global trade and energy strategies. The game is changing, and we've got to be ready to play it smart, folks. Let's talk about a big shakeup in the global oil market that's got everyone's attention. China, in a bold move, is now turning its back on US oil, choosing instead to cozy up with Russia and Saudi Arabia for its crude supplies. This isn't just a change of supplier, it's a seismic shift that's stirring up the entire US economy. Imagine this. In 2023, China spent a cool $22.4 billion on American crude. That's no small change, but when you compare it to what they're investing in Russia and Saudi Arabia, it's clear we're not the favorite anymore. This pivot away from American oil means fewer dollars flowing into our economy, risking jobs and investments right here at home. Moreover, as China snubs our oil, it undermines our clout on the world stage. We're talking about serious geopolitical repercussions here, and here's where it hits your wallet. This drop in demand from China could leave us with more oil than we know what to do with, potentially driving down prices. Sounds good at the pump, right? But lower prices spell trouble for our oil producers and could ripple out, causing economic headaches in regions that depend heavily on this industry. But that's not all. Historically, oil trades have been done in good old US dollars, reinforcing its strength globally. Now, as China and others start trading oil using their own currencies, or even alternative ones, our dollar's dominance is on shaky ground. We saw a historic shift in March 2023, folks. Over half of China's payments and international deals were made in their currency, the renminbi, outdoing the dollar for the first time. This move away from the dollar could shake things up, making our currency less desirable, potentially leading to higher costs for imports and possibly cranking up our borrowing costs. China's not just looking out for better oil deals, they're playing a long game to cut down reliance on the US dollar, aiming to boost their own currency and shake up the global economic order. Aligning more with the global South and BRICS nations, they're pushing for a world where Western financial systems aren't calling all the shots. So, let's not kid ourselves. This isn't just about oil. It's about power, influence, and the future of our great nation in the global arena. We've got to keep our eyes wide open and stay sharp. All right, that wraps it up for this video. Thanks for tuning in. If what you heard today struck a chord or gave you something to think about, show us some love. Hit that like button, subscribe, and be a part of our community. Your support means the world to us, and it's what keeps us going. Stay connected, stay informed, and let's keep this conversation rolling. Thanks again, and see you next time.